Hey everyone, and welcome back to the channel. If you're an investor or just curious about what's moving the markets, you've probably heard a lot about Pfizer lately. And let me tell you, their latest results are turning heads. Their stock actually saw a nice jump right after they reported, and for good reason. This week, the giant drug maker announced some seriously good news that sent their stock jumping. They didn't just blow past Wall Street's expectations for the last 3 months, they actually raised their profit forecast for the entire year. This is a huge vote of confidence, especially with all the talk about drug prices, tariffs, and navigating a complex world post-pandemic. So, let's break down what's really happening at Pfizer and what it means for you. First up, the numbers speak for themselves. Pfizer now expects to earn between $2.90 and $3.10 per share for the year, up from their earlier forecast of $2.80 to $3. That's a good bump, showing they're feeling pretty confident about their future earnings. For the recent quarter, they pulled in a solid 78 cents per share in adjusted earnings, which absolutely blew past what analysts were expecting by a long shot. Analysts were only guessing around 58 cents. That's a huge beat. And get this, their revenue hit a stunning $14.65 billion, easily topping estimates of about $13.5 billion. Their net income absolutely exploded, soaring to nearly $3 billion compared to just $41 million a year ago. That's a massive turnaround and shows just how much progress they're making. The company also reaffirmed its full-year revenue outlook, expecting sales to be in the range of $61 to $64 billion. So, what's fueling this impressive performance? A big part of it comes from the strong demand for some of their existing powerhouse drugs. We're talking about their heart disease treatment, Vyndaqel, and the popular blood thinner Eliquis. Both of these drugs are doing incredibly well and surpassed expectations, acting as linchpins for their post-pandemic recovery. Even their COVID products like the vaccine, Comirnaty, and the antiviral pill Paxlovid surprised everyone by bringing in more sales than anticipated in the last quarter. Comirnaty's revenue jumped by an impressive 96%, and Paxlovid sales were up by 70% due to higher prices here in the US. This shows that even as the world moves past the pandemic, Pfizer is still finding ways to make those products work for them, effectively pivoting beyond those huge pandemic-driven sales surges. But it's not just about what they're selling. Pfizer has been laser-focused on cutting costs, and it's clearly paying off. They've been aggressively working on 2 big cost-cutting programs, aiming to save around $7.7 billion by the end of 2027. These savings are a major reason they could raise their profit outlook, especially while dealing with other challenges. In fact, they've already saved about $4 billion through 2024 through these programs, and they're reinvesting those savings right back into research and development, planning to spend over $10 billion in innovation in 2025 alone. Speaking of challenges, you might be wondering about the pressure from the government to lower drug prices or the impact of tariffs. Here's the deal. Pfizer's new forecast already accounts for these headwinds, including potential drug price changes and existing tariffs from places like China, Canada, and Mexico. They've even said they have enough manufacturing capacity right here in the US to handle any tariff impacts, and they're open to shifting production to existing facilities if needed. On the flip side, the Inflation Reduction Act is expected to reduce Pfizer's revenue by about $1 billion this year due to higher discounts for Medicare. So they have to keep innovating and managing costs to stay ahead. Now, looking ahead, Pfizer's making some big strategic moves. They recently did a licensing deal with a Chinese drug maker for an experimental cancer treatment, which comes with a charge of 20 cents per share that will be recorded in the next quarter. But this is part of their larger plan to become a global leader in oncology, especially after their $43 billion acquisition of Seagen last year. That deal is expected to bring in over $10 billion in revenue by 2030, showing their serious commitment to this area. They're also heavily investing in new research and development, pouring billions into finding the next big breakthroughs, including using AI to speed up drug discovery and focusing on specialized therapies like gene therapies. They have a deep pipeline with over 100 active programs and 32 therapies currently in late-stage phase 3 development. However, it's not all sunshine and rainbows. Some of Pfizer's older, hugely successful drugs, like Eliquis, are facing what's called a patent cliff. This means they'll soon face competition from cheaper generic versions, which could eat into their sales. Across the industry, more than $300 billion in global revenue is at risk from patent expirations through 2030. Plus, as mentioned, the Inflation Reduction Act is expected to reduce Pfizer's revenue by about $1 billion this year due to higher discounts for Medicare. So they have to keep innovating and managing carefully to stay ahead. Despite these challenges, many believe Pfizer stock is undervalued right now. The company's total market value is around $134 billion. Their stock price sells for about 8 times its annual earnings, which is much lower than the average for the healthcare industry, which is closer to 16 times. Historically, Pfizer stock has also tended to see a positive bump the day after their earnings announcements, happening about half the time. This combination of strong performance, strategic pivots, and what looks like a good value could make Pfizer a stock to watch closely. While some analysts maintain a hold rating due to competitive landscapes and long-term growth uncertainties, the overall sentiment points to a resilient company adapting to a changing market. So, there you have it. Pfizer is navigating a complex landscape, but their latest results and future plans show a company that's adapting and pushing forward. They're focusing on innovation, cost efficiency, and building up new areas like oncology. It's definitely an exciting time for the pharmaceutical sector, and Pfizer is aiming to be at the forefront. If you found this breakdown helpful, please give this video a big thumbs up, subscribe to the channel for more market insights, and don't forget to hit that bell icon so you never miss an update. Thanks for watching, and I'll see you in the next one.